What is going on, guys? Let me know if you can hear me. What's going on? Just getting things ready. Just getting things ready. Let me send out a couple of notifications saying that I'm live. So 1 second. How you guys doing? Good morning to all of you. Good afternoon if you're on a different part of the world. Talking about covering. What are you guys excited to hear today? What do you think Jerome Powell is going to say on day two that he hasn't said already on day one? Let me know. Because yesterday he was talking to the Senate. Today he's talking to the House. So we're going to check in on the markets in a second. Markets are probably flat. I'm just going to guess that there isn't a huge reaction so far because, again, they're going to wait until 10 p.m. when Jerome Powell testifies. Reacting live. All right. Cool. Let me just try this out on Instagram. Just gonna announce that I'm going live on Instagram. 1 second. I don't even know how to do that. How do you do that? Go live? How do you go live? Oh my God, I swear to God, I don't know how to go live on Instagram. Oh, live. All right. Let's do this. All right, for those of you guys that are joining on Instagram, we are going live on YouTube. Make sure you head over to the YouTube page. Live now at everyone. Okay. Sorry, I'm a novice at this stuff. Guys, for those of you that are on Instagram, go over to the YouTube page. We are streaming live. We're streaming the market live. We're going to be covering Jerome Powell day 2. We're going to be covering the stock market's reaction. We're going to be covering exactly what Jerome Powell might say today that's different from yesterday. I don't know what he would say today that's different from yesterday, because yesterday he was testifying in front of the Senate. Today he's testifying in front of the House. So for those of you that are Instagram live, go over to the YouTube. So I'm just going live on Instagram to tell you to head over to the YouTube. Without further ado, let's get right into it. Let's say hi to some people. Let's say hi to Brian Rodriguez from the city of DC, Richard Soren. What's going on? Richard says probably more of the same. Yeah. And for those of you that are already on the YouTube live stream, hit that thumbs up. Let other people find this. Please hit that thumbs up. Team RP, what's going on? Cruz, Carlos Peralta, Mike Sanchez, Lewis, what's going on? What's going on, guys? Borislav, afternoon in Bulgaria. What's going on? Good afternoon. Sultan, good morning. Masterhand, Astro Greek. Same speech as yesterday. No? Well, that's the thing. Obviously, the market doesn't think so. So let me pan over to my background here. And we can take a look at what the markets are doing. So the markets right now, by the way, for those of you that are on Instagram, join me on YouTube. We are live. So if you look at the markets, they're flat. So the markets are expecting some sort of reaction, right? They're expecting there to be, I don't know, maybe slightly different tone. The thing is, the speech itself might be, similar. And actually, there wasn't really anything that he said yesterday that was different, right? Like, what did you guys hear? Let me know in the chat. But what did you guys hear yesterday that was so different from what he said and what other Fed members have already said? Right? What did Jerome Powell say different yesterday? He said higher for longer. We see rates going higher than expected. Inflation is sticky. He really didn't say much, right? He didn't even give a specific number as to whether the rates might hit 6%. He didn't give any indication of anything. He didn't say that we're going to raise by 50 basis points. He didn't say, you know, he didn't give any sort of details that would elicit that type of market reaction here, right? But if you look at the bond market now, today yields have slowed down, but the bond market and the Fed funds futures, they've really been believing the Fed all along, right? If you look at the Fed funds futures, for those of you on Instagram, join me on YouTube. We are live on YouTube. So I'm just going live on Instagram to tell you to join me on YouTube. But if you look at the Fed funds futures, you could see here that now it's a 75% chance that they do a 50 basis point rate hike. So this is due to a few things. One, all of the revised CPI and PCE. For those of you that don't know, the CPI and PCE came in revised. 4 of the last 5 months came in revised higher. And secondly, the inflation in Europe has came back roaring, specifically in Germany and France, the 2 largest economies in Europe. So that might be sort of a predictor of what could happen to the US. And 3, the jobs market is strong as hell. I mean, I think we just got a data drop on private payroll. Someone had posted it in the academy. Where is it? Someone had posted it in the academy. I can't see it now, but private payrolls are better than expected once again. Maybe I will go ahead and just and Google this, but private payrolls are up once again. And so the strong jobs market, the revised CPI and PCE coming in higher than expected, the inflation in Europe roaring back. It's right here. Private payrolls rose by 242,000 in February, better than expected. So the expected was 205,000. And in January, we had 119,000. So again, the jobs market is really not cracking under the pressure of Fed rate hikes. For those of you that are on Instagram, please join me on YouTube, where we are live talking about the markets, talking about Jerome Powell day 2. So follow me on YouTube. Click the link in the bio, and it will take you over to my YouTube. So really, the bond market and the Fed funds futures have been believing the Fed, right? And now you see today, once again, just as yesterday, the market opens up very muted. The market opens up very muted because they're waiting what Jerome Powell has to say. But Jerome Powell gave a full testimony yesterday. So my take on it is that the House today is going to be grilling him in a different way than the Senate, right? The Senate, the Senate members had a chance to grill him yesterday. The House might be a little more aggressive, and they might get more information out of him. That's the only thing I can think of. I don't think that Jerome Powell's speech itself is going to be all that different. But I do think that the questions that they ask him and the way that they grill him is going to be different. And they might get something out of him today that they won't yesterday. But as I was saying yesterday, if you guys caught the live stream, and shout out to you guys who actually caught the short that we did on live. And I will, once Jerome Powell starts talking, I will be looking for trades as well. The thing is, usually between 9:30 and 10 Eastern is the most action that you get in the market right at market open. But yesterday, and it seems like today, we're getting a very muted reaction. So really the time to trade for me is not now, because you don't want to be guessing what the hell Jerome Powell is going to say beforehand. You want to play, as I said yesterday, you want to be playing the post reaction. You don't want to be guessing before the reaction. That's not an optimal trade. That's not a way to trade. So I will be trading after the speech itself, right? But we are seeing a muted reaction during a time when you usually see the most volatility, which is, the first hour of the market. Let me get to your comments and see if you guys have any commentary or questions. Vina, morning from Bogota. What's going on? I used to work in Bogota. Very familiar with that city. Good morning. Good morning from Toronto. Morning from NY. Afternoon in the UK. You guys are worldwide. This is awesome. I love seeing this. Z, would you short TLT based on upcoming rate hikes? Mm-mm. Remember that TLT is a 20-plus year Treasury ETF. Rate hikes affect short-term Treasuries, not long-term Treasuries. They eventually do have an effect on long-term Treasuries, but not as much. Look at the rates here. The ones that are the most changed are the ones that are 1 month out to 2 year. Those are the ones that are rising like crazy, right? These are the ones that are affected by short-term or by the Fed funds rate hikes, right? And the reason is this: the federal funds rate is an overnight rate. Okay, that is the rate at which banks lend to each other. So if banks are charging each other the federal funds rate, which is now at it's now at around 4.6, right? If banks are charging that to each other, then they have to go out and charge us a lot more for other things, and then also for things that we want to buy, and then also the investors, the bond investors, are going to demand a lot more from short-term treasuries for that fact, right? So if the federal funds rate is 4.6 and the price of everything that the bank is charging you more, then bond investors are going to require more yield, which is why the short-term yields go up the most, as they are the most tied to the Fed funds futures rate. Hopefully that makes sense. So TLT is right here. TLT has to do with bonds that are in the 20 and 30 year range, which are the least affected by Fed funds futures. If you wanted to play Fed funds futures, you should go for short-term derivatives, not long-term derivatives, right? Hopefully that makes sense. It doesn't mean that there isn't a trade on TLT, but if you're merely playing the interest rate hikes, TLT is not the way. Rhett Brown says, same lipstick, same pig. PW says, less disinflation language. Yeah, maybe. I do think that the House is a little more aggressive than the Senate in their commentary, in their questions. So I do think that the House might prepare more or try to get more out of Jerome Powell that they didn't see him talk about yesterday. That's just my take. So we'll see. Anonymous, thank you so much for your donation to St. Jude. 2 donations from 2 different people. Anonymous, $5 and $20. Thank you guys so much for your donations. For those of you that are on Instagram, join us on YouTube. We are live on YouTube. Click the link in the bio and it will take you straight to YouTube. Rena Kwong, morning from Singapore. What's going on, Rena? What is the possibility of the market testing October lows soon? Okay. I talked about this before. It's not rocket science. And there was a reason that I sold my stocks. I did that video on February 6th or 7th, right around here. Got, most of the commentary was positive. Got a lot of flack from some people that ended up deleting their comments later after the market tanked. But the reason is because we were reaching uncertainty. Stocks had rallied. A lot of stocks had rallied 100%. Think of stocks like DocuSign, and ARK, even Tesla. And I don't think that there was a dislocation between what the stock market was doing and what the bond market was doing. And the bond market was predicting future doom and gloom. If you look at the if you look at the 10-year, 2-year yield, I'll pull it up for you. But the 10-year, 2-year yield, I think now is the most inverted that it's ever been. So because of that, I'm going to pull it up right now. It's crazy how inverted this is. The 10-year, 2-year yield is now the most inverted it's ever been. It's at minus 1.3. Look at this. That means the 2-year is paying more than the 10-year on an annualized basis. This is the most dislocated it has ever been. Remember, I was saying that short-term interest rates are the ones that are affected the most by the Fed funds rate. And so the 2-year has rocketed past the 10-year. The 2-year is paying almost 5. The 10-year is paying just under 4. In general, the 10-year is supposed to be paying way more than the 2-year. Okay, so because of that, I was saying that it's only a matter of time before the bond market or the stock market believes what the bond market already knows, which is that the Fed is going to pump rates a lot higher than expected, and that the market is the economy might crack under the heels of that, right? And they won't stop, by the way, until really the economy cracks. So, what I think with the stock market is if CPI comes in higher than expected on March 14th, we will be live streaming on March 14th. But if CPI comes in higher than expected, I do think we will revisit December lows. And if the Fed actually does 50 instead of 25, which 25 was the suggested rate hikes all along, then I do think we can revisit those October lows. So that's my take on it. Two events need to happen. Otherwise, it's going to be hard to break those October lows without that, right? That exchange between Warren and Powell yesterday was awesome. Yeah, I mean, I think like I think that Elizabeth Warren, maybe her heart's in the right place, but I do think she tends to get a little exaggerative and performative in my view. I mean, I think that about most politicians, let's be honest. But especially her when it comes to things like stock buybacks or interest rates, I don't think she quite gets. Or you know what? She's very smart. I know she gets it, and she's very rich. Okay, I know she gets it, but she has to perform as if she cares about the working class, saying that she was telling Powell, you keep raising the interest rates. What is that going to do to the 2 million jobs that are eventually going to be lost? And I think his response was something like, what do you want me to do? Just walk away and leave inflation at 6%? Is that going to help people more? And he's right, and unfortunately, that is the collateral damage that our capitalistic economy yields sometimes, right? It's in order to keep things in balance, sometimes you have to reset the system. And in this case, we only have a few tools to do that. Interest rates are one of them. And, hopefully it's minimal damage and hopefully it's very temporary before the economy is fixed and, not too many people are hurt. But he was right. He was like, if I leave inflation at 6%, everyone's hurting. And, he will raise the interest rates. We will eventually get to some job losses and it will affect some people. But I think 6% inflation affects everybody. So, yeah. What's up, Z and team? Cameron, what's going on? If you let inflation, society would collapse. Yeah, exactly. Can't make an omelet without cracking a few eggs. I mean, yeah, I try to refrain from these metaphors when we're talking about people's lives, but it's true. It's true. Would like to hear your thoughts on SQQQ calls. Based on what? Just if you are just doing this based on a hunch, don't do it. Don't trade based on a hunch. What is your thesis, right? Looking at SQQQ, this is the inverse ETF, the inverse NASDAQ ETF. But what is your thesis? Just guessing that we might go red and so you want to make some money? Or are you actually looking at a chart? Are you actually looking at this retracement here? Are you actually looking at your risk to reward? Or are you just wanting to gamble, right? All right. Let's go back. She is fed information and just parrots what she's told. Too easy to run circles around more politicians. Yeah, again, I think her heart might be in the right place, but at the end of the day, she's a politician. And whether we're talking about Elizabeth Warren or Rand Paul or Ted Cruz or whoever, they're just out there grandstanding, right? They're all of them are using that position for their own personal gain, right? None of them go into that position and then leave poorer than they were. Even my man Bernie Sanders, right? I respect Bernie Sanders a lot. He seems to be one of the only politicians that's been saying the same thing for 40 years. But even him, you don't think Bernie Sanders is a millionaire? He is a millionaire. And he just came out with a new book. Karen Brody donated $20. Thank you so much, Karen. Appreciate you. Would raising taxes on the wealthy help the issue? I think I don't know about raising taxes on the wealthy. I do know about making sure that everybody pays their fair share. So I do think, and I know this from personal experience, right? Like I do think being in a different tax bracket does there are a lot of things, a lot of loopholes, and a lot of strategies that you could take advantage of. That a single mom working a job at McDonald's and a job at Walmart is never going to be able to take advantage of. That's for sure. So, I don't know if raising taxes. I think maybe that the tax rate that we have is fine. But making people pay their fair share, regardless of income level, I think, would probably increase the tax revenue, right? So people should not be allowed, in my view, people should not be allowed to be billionaires and pay 0% in federal income tax, right? I don't know if raising the tax rate is going to help solve that problem, but making people pay taxes just like everybody else might. So, yeah, I don't know. Z is a specialist. Oh, snap. Wouldn't have guessed that. What is a specialist? I have no idea what that is. Honestly, I don't know what that is. Are you bearish or bullish? Where do you think we are heading? Will inflation come in hotter than expected, in your opinion? I hate this term bearish or bullish, because what do you mean? Do you mean bearish or bullish for the long term? Do you mean today? Do you mean by June? Like, what do you mean? That term doesn't make sense, right? For one, I'm a day trader and I'm a long-term investor. So every day I wake up, I'm neutral. I don't care where the market goes, because because I can trade either direction. Yesterday we shorted the market. Today might be longing the market. Who knows? I'm waiting to see to examine a perfect setup. Long term, I'm always bullish on the stock market. How could you not be? Look, this is the S&P 500, right? Going all the way back to, in this case, these are S&P 500 futures, but this is going all the way back to 97, right? So, almost 30 years, the stock market's only gone up. So how could you not be bullish in the long term? So in the long term, I'm bullish. I don't know what you mean by, are you bullish or bearish? If you mean in the next week, I don't know. I don't think in those terms. All right. That's a very long-winded way of saying I don't think on those terms. Government spending needs to get better, not more taxes. I didn't say more taxes, Bryce. You weren't listening. They need to show they could spend our money better before we give them more. I totally agree. I didn't say more taxes. I said, there are opportunities afforded to people like me, and people that are even wealthier than me, that poorer people or less well-off people can't take advantage of. That's all I'm saying. I didn't say raise taxes at all. I said I don't think raising taxes is the key. Thanks for the reflection. Yeah, no worries, Lewis. Dollar's almost touching 200 moving average and also upper channel. Do you think the market will up soon? What do you mean by soon? Today only? Are we talking about one day? Thanks for the meta play yesterday. Yes, no worries. Thank you so much for your donation. If we do visit October, December lows, pretty safe to establish positions? No. What do you mean pretty safe? You mean that I want to buy in, but I don't want to lose a penny? No, that's not how the stock market works. If you want safety, go here. You have all of these bonds available to you. By the way, if you guys are on Instagram Live, what's going on, guys? Make sure that you join me on YouTube, where I'm live streaming right now. Link is in the bio. If you want safety, whoever asked that question, you go treasuries. You go treasuries. Why would you invest in the stock market? The stock market is not safe. Okay, it's not considered a safe asset. It's not, well, it's considered safe if you're investing in something like an index fund, but it's not considered risk-free. I should say that, right? Treasuries are considered risk-free. These, and specifically the 10-year or the 30-year, depending on who you talk to, is considered the risk-free rate. Okay, so treasuries are risk-free. Not the stock market. So I don't know what you are requesting when you are asking, is it safe to invest in October, December lows? We could always go lower. I mean, you can always have unrealized losses. There's a given fact that the more income you have, the more opportunities you have for tax evading. The rich run the economy. Jonah, I agree with you. I've been in, every tax bracket imaginable in my lifetime, and I can tell you that that is a fact. Of course. Trying to diversify my Roth. I have some mutual funds that are geared more towards tech, planning to add some TLT for the long term. Your Roth is your business. I'm not going to talk about your retirement account, okay? Do your own research. It's not that hard. It's honestly not that hard. If you need to talk to a financial advisor, even though I personally have encountered a lot of terrible financial advisors, but I'm not going to advise you on your retirement accounts. Do your own research. It's not that hard. Maybe using save was poor choice word, but I get your point. Thank you. Yeah, I honestly, I talk to tens of thousands of people through this platform. Everyone has a different risk tolerance. And some people by safe mean I don't want to lose $1. If that's the case, stay out of the stock market. You told y'all subscribers that POW was dovish yesterday. He told us what we already knew. I didn't use the word dovish or hawkish yesterday. So no, I didn't. Professor Z's response to vague, non-specific questions. Flat tax is the best option. Z, Mike, dead. Yo, Z, what levels are you looking at on the SPY today? Or are you making a trade on momentum? I'm not. There's nothing here that could tell you whether the SPY will go up or down today, okay? There's nothing. We're flat. We're at 0.09. If this was a normal day, this candle right here, this energetic candle right here, right? And by the way, for those of you on Instagram, I'm live streaming on YouTube, so follow me on there. This candle right here would make me take a bearish trade today, right? If we were just talking about in isolation, right? This energetic move down, to me, this is a signal bar, and I would have taken a short today if Jerome Powell wasn't talking. Oh, we have 2 minutes left. I gotta find where the hell this is. Hold on. I'm looking on. I'm gonna look on CNBC's YouTube channel. 1 second. Cool. Yep, it's right here. We got it loaded up. Don't worry, folks. We will get to Powell in a couple minutes. So if we were just going off this is a signal bar, just like this is a signal bar, just like this is a signal bar, just like this is a signal bar, right? Just like this is a signal bar. These are energetic moves. So if I was just to make a move based off of that, that is the move that I would make. However, today's not a normal day, right? We have a lot that's priced in. We heard Jerome Powell talk for hours yesterday. So a lot of that is priced in. If he doesn't say anything different today, the market could actually rally, right? Or be flat. But if the house is able to get something out of him that we haven't heard yesterday, then yeah, I mean, I do think that this right here is a lot of selling pressure. I'm not really looking at levels today. I'm looking to basically see what the after reaction is from Powell. You're going to likely get long wicks in both directions, as we did yesterday, as soon as he starts talking. That is not what you want to trade. You don't want to trade that. You want to trade the reaction, the retracement, right? A much more optimal trade. For those of you that were on yesterday, I was talking about that short on live. That was a retracement short. That had nothing to do with the initial reaction. As you see here, this barcoding, this is not tradable, right? You want to stay out of this. You just want to be watching this from the sideline. And then once price starts stabilizing, as it did yesterday, you want to trade the retracement. I'm ready to trade it in either direction, right? I don't care what the direction is, but it has to be an A+ move for me to get in. And obviously, our analysts in the academy are also going to be sending out alerts as I am live streaming here. So for those of you in the academy, keep that window open and watch out for those alerts. because you will get them. So, and for those of you that aren't in the academy, click the link below if you want to join. You get access to 60 plus videos of courses, the mastermind calls with me where we go over, you know, every single trading topic from technical analysis to options to futures, etc. They are live Zoom calls with me that we usually do on the weekends when the market is closed. You get to ask me any question. And then obviously all of our analysis in real time. We are live every single day that the market is open. So just waiting on Jerome Powell here to start this testimony any minute now. CNBC's YouTube channel is going to go live. For those of you that are on Instagram, follow me on YouTube. That's where I'm streaming this stock market analysis live, is on YouTube. Link is in the bio. So follow me on YouTube if you want to catch the live stream, because we will be going over Jerome Powell's testimony and we will be looking at trades live as well. I wonder what NASDAQ is doing real quick. So NASDAQ minus 0.3. I do have a short on Meta, and I do have, I did hold my puts on Apple as well. Apple flat. Looks like Apple has more room to drop. Meta finally dropping after hitting our demand zone here. I do expect Meta to revisit the 160s very soon, and potentially in the next couple of months close this gap here at 153. All of this AI hype to me, you know, doesn't really have legs, especially in the face of rising interest rates and potentially rising inflation if we do get a higher print on March 14th. So, MacArthur Brody, appreciate you, man. Appreciate you. Thank you for donating $20. Thank you so much, bro. Thank you. There are so many traveling trader fake Instagram accounts. Which one is the real one? The only one, the one that I'm live streaming from now, right? The other Instagram accounts won't be able to live stream. I'm trying to get Instagram to approve me. They won't, unfortunately. I don't know why. Instagram is a lot harder to get approved than YouTube and Twitter, but working on that. I promise you. I promise you. I know it's frustrating and I'm sorry, but I only have one account. Z, if a market trades sideways for some time, does it usually trend downwards? That's not a thing, Alex. No. Dumped. Tesla down 3.6%. It's going to down, damn. Market tanked. Job openings hotter than expected. That already came out before market open. But the JOLTS data came out just now, right? Let's see. Did it come out? I don't know. Did the JOLTS data come out? No, the JOLTS data already came out, didn't it? The private payrolls, I just showed the private payrolls this morning. I don't know, but let's see. Let's go back to S&P 500. S&P 500 didn't dump. It's still flat. NQ is flat. Again, I don't know what you guys are talking about. 75 basis points looking juicy now. They're not going to do 75 basis points. Don't count on it. Shout out to Jay Powell for the 200% SPY put yesterday. 2 in a row. Well, check back here. We're going to be analyzing the market. Tom R., good to see you, brother. Good to see you. Just bounced a bit. Yeah, you guys are overreacting a bit too much. This right here, this is what your sorry, let's go to ES. The ES 1 minute looks insane. Where is Jerome Powell? If you guys see him on a different feed, let me know, because this is the one. This was supposed to start right now, and it's 5 minutes overdue, and they still haven't started yet. So, if you guys see him live on a different feed, let me check CNBC. Let me check CNBC live real quick on their website. Let's see what they're saying.
Anyway, she said, yeah, 2 million's a lot. 85 million is a lot more, meaning the overall labor force that are dealing with these high prices all the time, especially when you're now looking at a lower, say, quartile where excess savings, Morgan Stanley, thank you, is expected to go dry in Q2.
Right. I mean, this is the fact.
Yeah, I don't think they would have been talking about Jerome Powell if he was live yet. There is something I wanted to show you guys. That is, as Carl Quintanilla was talking about savings. There's something that I saw yesterday.
Objection. All members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll note at the outset that this hearing has a hard stop of 1 p.m.
Okay, we'll go over, we'll review that in a second. But what I wanted to go over was this. So this in the red is personal savings, and in the blue is consumer credit cards. Look at how, personal savings boomed after the pandemic because of all of that money. People had a ton of money, and there was no spending because obviously of the pandemic. And then look at how sharp personal savings had declined to almost zero, and the consumer credit card is sky high. Consumer credit cards and other revolving debt, right? This right here is alarming, this intersection right here, but we'll talk about it more in a second.
When they don't have the votes to achieve something here in Congress, they turn to regulators. And now, Chair Powell, they're looking at you in the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office, we've experienced inflation at rates not seen since the late 70s and early 80s. Inflation rapidly accelerated after Democrats passed their so-called American Rescue Plan, which poured nearly $2 trillion of inflationary fuel into the economy. By June of last year, the Consumer Price Index showed inflation skyrocketed from below 2% to nearly 9%. And personal consumption expenditures, the Fed's preferred measure of consumer prices, ballooned to 7%. Instead of being rescued by Democrats, Americans were punished with pain at the grocery store and sticker shock at the pump. While inflation is now below its mid-2022 peak, it is persisting at rates well above the Fed's target. It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve on the regulatory front. Recently, the Federal Reserve's Vice Chair for Supervision announced a quote-unquote holistic review of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing. The Fed shouldn't operate in the shadows, especially when the regulation in question can have broad and significant economic effects. It's also unclear the motivation for the Fed's holistic review, particularly when so many board members have stated that the banking system is very well capitalized, and any review of capital standards should be targeted. It also appears the Federal Reserve Board is laying the groundwork for climate policy to be implemented through the Fed regulation with an opening salvo to quote-unquote scenario analysis. Addressing an issue like climate change is important, but a policy that should originate here in Congress by the elected representatives of the people, not the central bank. As you've said, the Fed needs to...
Thank you very much, Mr. Chairman. Good morning, Chair Powell. Since your last visit, our country, under the leadership of President Biden, has made major progress to...
All right. I personally am not interested in hearing their opening testimony. Or from the House members. It's just a bunch of grandstanding. I will definitely go back to it when Jerome Powell starts talking. Clearly, the market doesn't care about this either because market is still flat. We have the S&P 500 here on the left. The obligatory opening salvo phrase. Yeah. Yeah, he always says that. Traveling trader, just like you said yesterday, politicians sound like they're speaking in a theater play. They do. It's like the worst Shakespeare of all time. Yeah. Thoughts on TLT? I don't know. What are your thoughts of the new Super Mario Brothers movie? What about TLT? Understood your point on bonds. Not sure I can buy them. Religious reasons, but you're absolutely right regarding the risk in the stock market. Wait, honestly, not clowning. Chicago's very own. What religion would sanction the purchasing of stocks and not bonds? Honestly, is it because of the interest rate? I mean, you don't think that that corporations deal with corporate interest? Sure, you're not getting an interest rate off of buying stocks, but if you buy short-term treasuries, if your concern, if what I think is your concern has to do with interest, one, you can't avoid that buying stocks because the corporations themselves are dealing with interest. But two, if you buy treasury notes, which are, short-term treasuries, they don't actually pay out interest. You're buying them for a face value. So let's just say, for simplicity's sake, you buy a 2-year yield at 99, and at the end of the 2 years, that they pay you back 100. So that dollar difference is what you're getting. So it's technically not interest, right? It's not interest bearing in the same way that, say, a 10-year bond is, or a 20-year bond, which pays you a coupon interest payment every year. Obviously, talk to whoever your religious figure is, but technically, treasury notes don't pay interest. They're paying you back the face value. So you're buying it cheaper at 99, and they're paying you back 100 at maturity. But again, talk to your religious figure or religious leader. But it is crazy that stocks are like the Wild West and bonds are considered extremely safe, right? Not all bonds have interest, Mamoon. I just described what a treasury note, how a treasury note works, right? Or how a treasury bill works. Treasury bonds have interest. Treasury notes technically don't have interest. Did you start shorting Meta? Yeah, I shorted Meta a while ago. I've been in a Meta short for a while. I've been in Meta short since Friday. But stocks, you make a return on investment based on how the company's doing. I believe yes, I know, guys. I know. Okay, I know. Can you give us an analysis on the chart you're viewing? You say it's flat, but I don't see that. You don't see that? Okay. What does this look like to you? What does this look like to you? It's up 0.01 on the day. Okay. Of course it's flat. This right here, because we're looking at a futures chart, this is, the culmination of every candle. And futures are open basically, 24/7. And this is a 1-minute chart. But if you pull up the daily chart, you'll see that for the day, we're still at 0.01, 0.02. Okay. Plus or minus. But this right here is a 1-minute chart. These are 1-minute candles. And this is basically 24 hours of data. It's not just, after opening today. I'm looking at a futures chart because it gives you the most data, right? But here, I mean, there's nothing tradable here. You see, this is a liquidity wick. This is a liquidity wick. These are taking out everyone's stops on both sides. Every idiot who decided to trade before Jerome Powell actually started speaking, because we have all of these opening salvos here by these distinguished gentlemen and women. These right here are taking out everybody's stops. Everyone that's short, everyone that's long. Boom. Everyone that's short, take out their stop. Everyone that was long, take out their stop. There's no reason to be in this. Is it a good time to short Meta now?
Placed on the Financial Services Committee just as the economy was about to collapse. And so that was my trial by fire. The emergency.
I think you're late on Meta. I wouldn't call it a good time to short. I think that we could get some consolidation here. If you're going to hold it longer term, then yes. But you definitely missed the impulse move, because again, as I described with the S&P, this right here is a reaction candle, right? This is a signal candle, this bearish engulfing candle here. Just like I said, if Jerome Powell wasn't speaking today, I would be short the S&P 500. But check out what happened. Like, if you look intraday, this shows you exactly how stops on both sides can be taken, right? So if you went short and this was your support here, all of your stops got taken out, right? And same thing, people that are long are like, okay, I'm going to be smart. I'm going to go long. Yesterday was a huge red day. Now everyone is bearish, so I'm going to do the smart thing and go long, and I'm going to set my stop limit below the support. Well, guess what? The market took out all of your stops. No fucks given, right? This is why trading right now is no man's land. This is you're just asking for it, right? In my opinion. Got to have wider stops on days like today. Ivan, no, you got to be out on days like today. I'm specifically talking about the indices, by the way. If you are looking at, again, if you're looking at individual names like Meta, if you're looking at individual names like, let's just say Apple, if you're looking at individual names like Tesla, sure. Oh my God. Do you guys remember that Tesla short that I had? I mean, I closed it out for profit. I think we banked 40% on those spreads, but Tesla's at 180. Those spreads would have been 100%. Okay, let's hear what Jerome has to say.
Monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price stability, we will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. The activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remained very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past two meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell. I'll now recognize myself.
Wow, same exact speech as yesterday. Nothing's changed. Market is definitely a lot choppier than it was yesterday as he was talking. I think it was more directional yesterday. I am looking to see if we can get to this area of liquidity here on the S&P 500 at around 4,001. I do think that we could potentially touch this. I don't want to take really any short trades yet until we hit this level. Guys, hit that thumbs up. 300 likes and I will give you guys a trade. Hit that thumbs up.
To be analyzed. One of them came out at exactly 10 o'clock. That would be the JOLTS report, which, of course, I haven't seen, being sitting here at 10 o'clock. But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So
he said he hasn't seen the JOLTS report. Bullshit.
We're going to be looking at the totality of the data, which is what I said. That does include these reports yet to come. They're going to be important in our assessment of the higher readings that we have very recently received, and of the overall direction of the economy, and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path, and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher, longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January and also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is likely to be higher than we'd expected.
What are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing.
He finally admitted to the inflation actually being revised up. I think this is the first time he might have addressed it.
But nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put out a policy statement noting that digital asset custody is a permissible activity if done in a safe and sound manner. However, if a bank can demonstrate to the Fed that it can conduct that activity in safe and sound manner, the capital impact of the SEC's staff accounting bulletin effectively precludes banks from offering digital asset custody service at any scale. Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bulletin. This is SAB 121, I think. And
that's right.
Certainly aware of it, and we do follow general accepted accounting principles in our
yes.
capital regulation.
Okay. Well, without objection, I'll submit to submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process.
Bruh, this fool has a bow tie and an Apple Watch, okay? I have an Apple Watch too. I don't wear it every day, but you can't wear a bow tie and an Apple Watch. That combo just says something. A bow tie and an Apple Watch, that's reserved for a different kind of human being. I don't know what that combo is. Romy says, hit the thumbs up. It's free, like all these rate hikes we didn't ask for. Yeah, I mean, I put it on mute because he's talking about capital standards. Really nothing to do with interest rate hikes yet or the economy. And really nothing that he didn't say yesterday. By the way, this action here on the S&P 500 is a lot less tradable than yesterday. And clearly the market is, for now, based on what we see in the testimony so far, the market also hasn't really heard anything that they think is worthy of reacting to. So the market is still pretty flat. Let's hear some more.
Everything, including capital. That actually is typical of the.
He asked them a question about digital currency custody. Now he's asking him about some capital regulation or capital, what do you call it? When you, I think capital management regulation. So, yeah, nothing yet that the market thinks is worthy of reacting to. And I'm still eyeing whether we hit this liquidity level here at around 4,001 or not. There is also a liquidity level down here at around 39.8050, but there isn't anything signifying direction to me yet. I'm not comfortable taking a short for now, unless we hit this liquidity level. Like, I want to address all of the stops that might be up here, and then follow that trend down if we get a trend down. Again, depends on what Jerome Powell says. Clearly, the market doesn't think there's anything here worth reacting to. So let's see what Maxine Waters asks him.
Said on February 1st that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week.
She's talking about raising the debt ceiling, which is going to happen because it always happens. And it's used as a brinksmanship tool to try to get the other side to agree to something, right? So Republicans will try to get Democrats to agree to something before agreeing to raise the debt ceiling and vice versa. It's the oldest trick in the book. And unfortunately, having a debt ceiling is useless. Like, it just be capped, right? Because they're going to keep raising it, and the Treasury is going to keep issuing treasuries and borrowing, right?
Debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small
$2,200 billion
initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy.
We're going for that liquidity level. Again, I said I wouldn't touch a short until we address that level yet.
First, raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can.
There it is. Get there, 4001. Get there. Get there. Get there. Come on, you could do it.
Which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
There it is. We got there. You guys saw me draw this level minutes ago. So let's see. Let's see what happens now.
Also, what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part of them, and really they're between.
By the way, I'm not saying short here. I'm saying now that we address this liquidity, if there is a short, it will be more optimal and will present itself more clearly, right? But without taking this, which was an obvious liquidity level to me, especially as the market was flat, not really deciding which way to go, it was only a matter of time before banks ran this up to take all the liquidity here from retail who thought that they were smartly going to short this double top. This is why basic patterns in intraday trading doesn't really work, is because of these liquidity runs, right?
About the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat? until about June?
I don't, honestly. That's not for me to say. These are really questions for the Secretary. I'm sorry, Ms. Waters.
Have you had any conversation with her about the statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account, et cetera? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you.
Gentlelady's time is expired.
I beg your pardon?
The gentlelady's time is expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee.
Bruh, not only does he have an Apple Watch and a bow tie, he's got a little hammer. That combo, I can't deal with this human being.
Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us of, I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcome by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that right?
Yes.
And is it your view that if we had a
0.25%.
regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road?
I mean, they're talking about digital assets. This is so boring. At least the House could have made it interesting, right? They could have asked them questions. They could have looked at what the Senate asked them and what they didn't ask them, and then could have came back with some hard ass questions. But this is actually boring as shit. To be honest, I expected a lot more from the House. I expected this to be like kind of, maybe like that last battle in 8 Mile when Eminem battles B Rabbit. But this is so boring. This is like watching Cyril Gane and John Jones fight, or even worse, Yoel Romero fighting Israel Adesanya. All right. Let's see what happens to price action here. I mean, this is sort of a lull in commentary. We took out liquidity. Very curious to see if we head back down for this area of liquidity. Remember, I said that intraday, the market is just a series of taking liquidities, right? Liquidity from the top, liquidity from the bottom. And then what happens intraday is you trying to navigate that and find an entry. There, but I would not. You could have shorted liquidity here, right? Like if you shorted after this was taken at 4,250 and set your stop limit maybe 5 points higher, targeting maybe this area right here. This could have been a scalp, but it's not going to be a huge short, right? And as long as your target profit at least matched your stop limit, it's a fine scalp, but I don't see yet an optimal setup for a big move, right? If there was a short, that would be it. 5 points, nothing to balk at. 5 points on the futures is $250 per contract, right? So I wouldn't thumb my nose at that move. Not really. You are front running a bit, but within a tight stop, you could have ran that. Oh, Eminem was B Rabbit. Who was his opponent? Papa Doc. There you go, Papa Doc. Yeah, B Rabbit versus Papa Doc.
Just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside the yeah.
Yes.
So that leads me to Fed Now, which is supposed to be up and running, I think, this summer, somewhat behind the scene.
This is so boring. I mean, even the market's probably like, fuck this. And yeah, I actually don't know what the trading volumes are right now, but there's really no impulsive move to trade from. If this ends up being like a flat-ish day, that'll be the most boring thing ever, right? All right, let me know if you guys want me to take a look at a certain chart, or let me know if you guys have any trading questions. Do you guys have any questions on futures, on options, on strategy? Let me know, and I'll take a look. He said, Tesla, please. I went over Tesla earlier, man. Tesla is now at the bottom of this wedge. To me, this is not shortable. I think you missed the short. It's not shortable here. Do I think that Tesla is going to keep falling? I mean, that's tough to say. We do have a strong support level at around 170, right? But right now, I'd be interested to see how it reacts to the support off of this wedge. I can't really make any predictive moves on the daily chart for Tesla based off of this, right? On the weekly chart, it does look potentially bullish with this inverse head and shoulders here. But obviously, a weekly chart is much longer time frame than a daily chart. What happens from day to day could look entirely different. But I would not short this here, especially being at the bottom of this wedge. So I'd be interested to see how Tesla reacts to this level. How's TQQQ? I mean, it's just a 3x bull QQQ chart. So it's not going to move different from the NASDAQ. So asking how TQQQ is isn't any different from asking how the NASDAQ is, right? It's not going to move any different. It's just 3x that. Did you trade gold? No, I didn't trade gold. Where do you see Tesla's next strong support? I already answered that. How does NVIDIA chart look? NVIDIA chart, it looks it's looking toppy for sure. Excuse me. Sorry. With NVIDIA's chart, whoops. With NVIDIA's chart, what I'm looking at on the weekly chart is this gap here. We are already almost halfway to filling it. I do think NVIDIA so far is looking toppy. I don't think it has much room to run in the midterm. NVIDIA is one of these stocks that I was talking about that since October, NVIDIA has run 118%. It had decent earnings, decent guidance. Obviously, there's the AI hopes, but I wouldn't long NVIDIA here. I would actually potentially be looking for shorts soon. It's not yet optimal, but it will be optimal soon. Neo in your port? No, don't be funny. I'm not holding Neo. Apple, short or long? I already have a short on Apple. Ever since we hit this level on the daily, with this melted candle here, right? You see this melted candle here, very almost identical to this melted candle here from February 16th. So I have Apple short already. But Apple is one of the worst stocks to trade. If you're only looking at a chart, it has the most irrational, unpredictable chart I've ever seen. It's really, for me, only good for, either intraday or a few days out, but it's very hard to predict Apple over the long term. But currently I have a multi-day short on it. Bearish on Airbnb. As a company, as a chart, what do you mean? Bearish for when? Long term, short term? Guys, you have to learn how to talk about this stuff in context. Honestly, like, you know, you could be bullish on Airbnb's future. You could be bearish on its chart in the short term. You could be bullish on its chart in the short term, bearish on it in the long term. Like, bullish or bearish is very childish. It doesn't really provide any sort of context as to time frame. Are you talking about the chart? Are you talking about its fundamentals, its balance sheet? Are you talking about its cash flow statement? Like, what are you talking about? ES shot down off your level. Let's go back to ES. Yeah. You know, I said that it wasn't an optimal short, but I also said that I would not be interested in shorts until this liquidity is addressed. And even if I took that short, if I'm being honest, guys, this is where I would take profit, right? This block of candles right here, I would not hold that short long, especially since we haven't gotten any real definitive statements from Jerome Powell yet on the economy, right? There isn't anything too different from yesterday. There isn't anything brand new. And so if I did take the short here, I would probably just have a 5-point SL and would target this area here. So I would be out of it if I'm being honest. You know, it would be around $250 per contract. Do you follow European indices? No, I definitely don't. I follow what's going on with the European economy. See, this is why you don't want to fuck around and find out.
Literally, this country doubling GDP. Now, I know we're putting CPI, PC.
Okay, here we go. He's talking about something important. I'm going to get more coffee. I'll be right back. Listen to this.
But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range percent of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to your. So I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start looking at and start putting pressure on us to gain those efficiencies as a result of a global view?
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the workplace. You've got a role. my interest rates, and yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Gentleman yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Thank you very much, Chairman, and welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Miss Waters asked me to take a look and kind of work with you and the Fed.
I can't with this. I'm sorry. I can't. I just can't. I can't listen to these people. I'm sorry. This is an area where I had myself on mute. But this is an area of interest for me where I'm potentially where I would potentially look to go along with a tight SL. Probably 39.85, 39.84, somewhere around here. To me, this would be a target range. So let's see. Actually more reluctant here. More reluctant, honestly, because we broke past these higher lows here. So actually I'm more reluctant to do that. So I take that back, actually. I take that back. All right. Someone said, how far along NVIDIA put should be. I didn't say anything about NVIDIA puts. Stop projecting on me. I was sitting on the edge of my seat waiting to hear what Mr. Scott had to say about 2000. Dr. Jennifer Berry, not only a doctor, also a comedian. Me too, Jennifer. Omar says, another live stream tomorrow. You guys really like these live streams? Hit that thumbs up if you do, then. Hit that thumbs up. Let's see how far this bounce lasts. I mean, this to me is an area of interest, but I don't know that we get an energetic move up from here, right? Like, again, scalpable levels maybe, but I don't think we get an energetic move up. All right, let's see. And remember, we have VWAP here too. I personally would not have longed this unless it was just a tiny scalp, but I wouldn't be holding this long. Especially since we broke these lower highs here. Let's see. And we are now below VWAP. So let's see if we reject from here and continue down. To me, the only optimal short so far, and it wasn't even optimal, so let me not lie and say it was A+. The only short I would have entertained was the short from liquidity, as I talked about before. And this would have been a very short scalp. I would not be holding this long past 4 or 5 points here on the S&P futures. But I mean, they both would have still been profitable. So let's see. Right now, I'd be targeting this area here of liquidity. Right here. 39.80, around 39.80 on the S&P 500. On NASDAQ, let's see how things look.
Appropriate tailoring.
All right, so we that's off the board. We're not going to change and put the smaller and regional banks under the same financial obligation role as the large banks. We got that right from you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China, and right now people may not know it, but China is the world's largest economy in terms of purchasing power. Now, at our last meeting, I talked about this move where we didn't blow the balloon up. And this is an example of what I was pointing out.
Gentleman's time's expired. We'll now recognize the chair of the Science Committee, Mr. Lucas of Oklahoma, for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, I'd like to follow up on the topic of capital.
Poor guy. This fool was about to get into the balloon, and he got smacked down. He said China is the largest economy in the world, and about the balloon, why did we blow the balloon up? And he said the gentleman's time's expired. Oh my God. Oh shit. All right. What was I saying? Yeah, on the NASDAQ, looks very different from the S&P this morning, but again, aside from the short scalp, which was a decent entry, nothing that signifies a larger move for me yet. So yeah, I don't see a large move yet, and a lot of it has to probably do with all these sleepy ass dudes talking on here. even market makers and institutions are like watching this, falling asleep. So they're not doing their jobs to push the market. Oh my God. Can you turn it up past 0.25 playback speed? I mean, I wish, I think in the future someone should create some sort of AI to do playback, to change the playback speed live. But, unfortunately this is not recorded. So, yeah. All right, let's see what happens here to the S&P. Again, only thing that I probably would have played for a scalp is a short from liquidity. And I said, again, if you are going to long this area of interest here, it would only be a scalp. This does, I wouldn't even say it looks bearish to me. I mean, it definitely looks barcodey. But the next real area of interest that I'd be targeting is this liquidity level down here at around 39.80, around there on the S&P 500. NASDAQ looks a bit different. NASDAQ looks a bit different. We're still trading well above VWAP on the NASDAQ. And we did target, we did same liquidity grab as the S&P. You see here, this liquidity from, what time was this? From market open, right? This liquidity here, we went back and addressed it. You could have rode the same scalp down on the NASDAQ, but nothing too energetic. Nothing too energetic. This so far has been a pretty sleepy day in the market. I mean, total, the S&P is still up 0.01 or 0. Now it's at exactly 0.00. Right, so that tells you how flat it is. And the NASDAQ is at 0.18. Super flat day so far. Not a lot of energetic moves. Maybe after they stop talking, the market will try to react in one way, and then we'll get counter reactions off of that as well. We'll see. We'll see. All right. What else should we be looking at? What else should we? Yesterday had so much bombardment. Yeah, because yesterday, was the first time that we heard Jerome. He hasn't said anything new today, and really these geriatrics are asking him questions about balloons and cryptocurrency. He really hasn't. I'm sure Jerome Powell was loving this, by the way. Jerome Powell probably came in today thinking that he was going to be harangued and hassled more than he was yesterday. And they're just, they're talking about everything under the sun except for interest rates and the economy. So, yeah. How's UVIXY and VIX looking? Probably very flat too. Yeah, I mean VIX is down 0.56% today. Probably very flat too, right? 10-year note futures. 10-year note futures are up slightly because yields are down, and 2-year note futures are probably up slightly as well. Yeah, the 2-year is crazy though. If you take a look at the 2-year yield. This right here, look at this. We haven't seen this level since 2007. So this is, yesterday I put out a tweet and I said, and by the way, guys, follow me on Twitter and Instagram for free daily trading and finance content. Follow me there. And you get more of the same commentary that you enjoy on these live streams. But as I was saying yesterday, I don't know how you could be ultra bullish on the stock market with this happening, right? It just, for me, it doesn't make sense. Especially when you have the 2-year now falling below, or going above, falling below the Fed funds futures rate, as it did for the last few weeks, right? And then now you see the 2-year yield spiking up once again, hitting levels that we haven't seen since 2007. You see the 2-year, 10-year spread being the widest that we've ever seen, the most inverted that we've ever seen. Actually, how do I do this? Yeah, let's do that. Let's go to, where do I have the 2-year, 10-year spread? Right here. The spread between the 2-year and the 10-year is at minus 1.3. So this is the most inverted this has ever been. Let me just make sure if I drag it all the way back. Okay, I take that back. In 1980, we almost had an inversion of 2, and that was the worst inflation that we've ever seen. So, I don't see how one could be bullish on the stock market, ultra bullish on the stock market with that said, right? 2-year looks like a liquidity grab. Would you try another ZT short? No, I think the short on ZT has gone. I would be more reluctant to short ZT here because remember, yields and futures move inversely. So if you're going for a ZT short, it means that you think that this yield is going to significantly go higher as opposed to find resistance here and potentially drop. So in this case, if you think that the 2-year yield is going to find resistance here, probably trade sideways for a bit and then drop, you actually want to be long ZT, not short ZT. What are your thoughts on 0 days to expiration and its effects on the market? Doesn't seem good for the market. What do you mean by good? There is no good and bad, right? This isn't the Avengers. Depends on what you mean by good. Some people will tell you it's really good for the market because it provides liquidity. Market makers are incentivized by creating more contracts. There are more market participants. So I don't know what you mean by good. That's not really a term that I resonate with because it depends on what you mean, right? Does it seem good in terms of providing novice retail traders with an opportunity to gamble more when they don't know what they're doing? Yeah, that part isn't good, right? If you're a retail trader that doesn't understand what you're doing and now you have more opportunities to gamble, sure. But market liquidity, is market liquidity good or bad? Would you rather have more liquidity or less, right? So Depends on what you mean. How do you feel about Andrew Tate? Any comments? I don't feel. I mean, he's a social media personality. Like, I don't know. How do you want me to feel? I don't know. Maybe you should short inflation if the Fed wants to ride the trend. Well, yes, but there are ways to short inflation. Again, if you think that the Fed is going to raise rates higher, you can always short or long using Fed funds futures, which the ticker symbol is /ZQ. This is what you see here, by the way. This right here is made up of the Fed funds futures. So if we go on TradingView and we pull up ZQ, right, 30-day federal funds futures, this is exactly what people are shorting and longing. So if you think that the Fed funds futures are going to be higher, you would short this. If you think the Fed funds futures are going to be lower, you would long this, right? But there are different ways to short inflation. There are inflation swaps. I personally don't trade them, but you can trade interest rates and things that are directly affected by inflation, right? So, is this week not hell week for Wall Street? In what sense? Do you feel like a top G? Yeah, I know I'm a top G. When are you opening up spots for the monthly Discord? I don't know. For now, we only have yearly and lifetime, which gets you access to all of the courses, all of the Zoom calls. Click the link in the description to apply. And if you are accepted, you will know shortly thereafter. All right. Jobs numbers come out on Friday. Yes. What is the best price for Meta Short? The best price? You guys frame these questions very funny. Some of you frame questions very funny. Not all of you. The best price was obviously the top. I mean, isn't that the logical answer? What is the best price for Meta Short? Was catching the absolute tick, back here on, what was this, February 2nd. That is the best price. How do you feel about Intel? I have no feelings about Intel. Do the lifetime, it's totally worth it. Yeah, Richard. Thank you for vouching. Click that link in the description. Join the fun. We have fun like this every single day. All right. Do you have a video on federal funds rate and interest rates and how they correlate? Yeah, I mean, I talk about that in every macro video, Lulu. Do I have a specific video? Probably. I mean, I have almost 1,000 videos on YouTube, I think. I can't point you to it. But in general, if you want the correlation, is the short-term interest rates are the ones that are affected by the federal funds rate. So, usually the 2-year is the one that's the most affected by the federal funds rate, not the 10-year, not TLT, which tracks the 20 plus years. It's usually the short-term interest rates. I work online, trade daily, swing and travel, surfing in Fuerteventura. Where is that? Where's Fuerteventura? Do you know any trading community that I can join? What? You think I'm going to point you to one besides ours? Yes, join ours. Especially since, we trade futures, which trade 23 hours a day, 6 days a week, virtually. And that is the, one thing I would tell people who usually work during market hours is look at futures. Do we want to play with fire and talk natural gas and widowmakers? Martin D says, wow. Guys, if you guys want me to go back to the speech at all, or if you guys think that Jerome Powell is saying something interesting, let me know. Wow, this ended up being a good long from here. I would not have held this long this far, by the way. So, just saying. But if you guys want me to go back to the speech, let me know. If you guys think Jerome Powell is saying something interesting. Wow, we're going back for buy side liquidity up here. Let's see what happens. Let's see what happens. We do have this. For me, this would be a huge area of interest. Let's see what happens here. Oh, natural gas. What, like Boyle? What is Boyle doing today? Boyle is down another 6.5%. Boyle is very hard to trade, in my opinion. I would much rather trade oil than gas, in my opinion. It's, for me, I'm more aware of the geopolitical triggers and catalysts related to oil than I am with natural gas. This is a fake out. We'll go back down. It's not really a fake out. Again, every day is just a series of taking liquidity, right? When institutions feel like they've taken enough liquidity, they can drive it to the other side. But I'm targeting this area of interest, and if we do see a retracement, I would potentially entertain a long from here. This is where I would entertain a very scalpable short-term long. Nothing, again, no long-term held positions. I would entertain a long from 3993 on the S&P if we see a retracement. If we don't, I'm very curious to see how price reacts at this level. So let's see what happens. Let's take a look at the daily chart on orange juice. No, dude. No, we're not trading orange juice, okay? We're not trading orange juice. All right, I'm very curious to see how price would react at around 3992, 3993. Nice, nice, nice. And also, I'm not listening to Jerome Powell, so I don't know if he's saying anything crazy right now. But again, if this was any other trading day, if this was just normal price action, this is where I would take a potential scalp for a long. Not seeing a huge move today. Trading places, yeah, exactly. Exactly, trading places. I mean, let's see what happens here. Dollar index, please. Okay, I'm going to keep this up because I'm very curious to see if I long that for a scalp, what would happen. The dollar looks like it has reached resistance here too, right? Which is what you want to see if you are taking longs, right? Now, and by the way, I'm not saying you can't take longs if the dollar hasn't hit resistance, and you can't take shorts if the dollar's hit support. But I'm just saying when you see that correlation along with, other areas of confluence, that is yet a further data point that you can use. Have any idea of HK stock market? No. Guys, it's crazy enough to keep track of one stock market, right? Like I can appreciate that a lot of you live in different areas of the world, but how do you want me to keep track of the stock market in Germany and Hong Kong and France and Indonesia? Like, that's just not realistic, okay? Use the tools and strategies and methods that you learn and apply to the stock market in your location, or you can trade the US stock market using no sound. Do you guys not hear me? Let me know if you guys don't hear me. You could trade the US stock market using something like Interactive Brokers. Can you guys hear me? Luis, fix your speakers, bro. I think it's just you. All right. Cool. Thank you. Do you think 16 to 17 would be the bottom for silver? Let's look at silver. I'm very interested in this long because to me, this was an optimal scalp. Not a large move. we're talking here about 5 points, five points or so, right? Silver. Yeah, I mean, I guess that looks like, that would look like a multi-year bottom is around there for sure. Yeah, to answer your question, sure. All right. How about the Russell? Woo! I hope you guys took this long. Easy 5 points. Easy 5 points. You would have got 10 points. You would have got 10 points off the short here. Easy 5 points out this long here. This isn't rocket science. This isn't magic. This is shit that we do every day. And if you are interested in this, join the academy. We go over these levels every day. In my view, pays for itself. Yeah, this would have been an easy 5 point long from here. Russell, okay. I don't trade the Russell as much as I do the S&P and the NASDAQ. I'm not sure what you want me to look at on the Russell, honestly. I mean, I don't know. What do you want me to look at here? Can you discuss liquidity grab? Okay, good question. So every single day, right? Every single day is a series of liquidity grabs. Why is this? Well, because if everyone is trading off of support and resistance, right? Oh shit, do I have a meeting right now? If everybody's trading off of support and resistance, I have to go in a bit. But if everyone's trading off support and resistance, how are institutions going to find liquidity for their shorts and longs, right? So if you have let's just say you have this resistance here, and you and everybody and their mom once here we go. Let me do the replay thing. Okay, let's just say that you're here. And in your mind, you're going to be like, hell yeah, once we hit, this level here, I saw on YouTube that someone told me that I should short at double tops or I should short at supply. So once we hit this level, I'm going to go short, right? Well, institutions also want to go short there, right? But how are they going to find liquidity? So if you want to go short there and institutions want to go short here, how are they going to find liquidity if everybody's going short there, right? Where are they going to find people that they can sell to, right? Where are they going to find buy orders that they can sell short to? Well, they're presuming that everybody's stop limits resides up here, right? So everyone's stop limits is in the form of buy orders, because when you sell short, you buy to close in order to stop out. So there are so many buy orders here. And those are the buy orders that institutions want to use in order to sell to so that they can take the short. So what ends up happening is, what ends up happening, sorry, let me do this. What ends up happening is that we get these liquidity grabs because these are everyone's buy orders resting above here. And now that the institutions have all of the liquidity they need, then they can take the shit short. That is what liquidity means, right? And it happens on the other side too. So this is why I say, learn to trade like the banks, and don't be a sucker for banks. Don't provide liquidity for the banks, right? And that is why we wait for liquidity to be taken before we make moves. So hopefully that helps. All right. Hopefully that helps, man. I've got that on a sticky note. Liquidity grabs are the areas where stop loss orders are placed. Grabbing is the need. Yeah, and by the way, there's a misconception that they know where stop losses are. They don't. You cannot see a stop loss order on the order books, right? You can't see a stop limit order, on the order books. So they're presuming that they're there, right? So they try to run the price up and grab all that liquidity, and then it becomes sort of like a squeeze where they can run a ladder on those stops. But they don't know that orders are sitting there. Their computers by now are just really smart enough to suspect where liquidity is. So hopefully that makes sense. Great explanation. It's the only good explanation you'll ever get from me. Definitely so helpful when you chart and call trades live on futures. Would love to see that more. Join the academy. You'll see us do this every day. He doesn't wear socks. Are you wearing socks? No, but that's not the right question. The right question is, are you wearing pants? We have to start with pants first before we get to the socks. Manu, how to find liquidity? I just told you this, man. We just went over a demonstration. They can see all the orders. No, they cannot see the orders. I just said this. They cannot see those orders. They just suspect that they reside above resistance and below support. All right, guys. Great session. Hopefully you guys got something out of this. Before you get on your way out, do me a couple of favors. Hit that thumbs up on the stream. Helps other people find it even after the stream is done. 2, make sure you follow me on Twitter and Instagram. I post daily free trading and finance content, including things I'm shorting, longing, what charts I'm looking at, reels explaining different aspects of the market and technical analysis. And 3, please, if you guys want access to all of the trades, courses, whatever, check out the academy if you are so inclined. That is it. And I will see you guys on the next one. For those of you in the academy, I'll see you in just a minute. I'm going to grab more coffee and I will see you guys there. And we'll talk about more trades live. All right. Peace.